if we struggle with fear of losing, it can also result in fear of giving back profits. And that's the last one of fears I want to dig deep into tonight. So yeah, we all know the concept of fear and greed, right? That's very common. We know that fear and greed are the most common emotions around trading. And people tend to sell in fear when the stock prices are too low. Well, if the stock is falling and people freak out, sell with loss, most likely, or with no income. And we saw it in bear markets. And then again, people buy in greed when the stock prices are too high and everyone is in state of euphoria. People just start FOMOing into stocks, right? So in greed, they're greedy. But in this part, I want to tell you about another interesting concept similar to fear and greed, but it talks about fear and hope. And it's a concept I've read in a great book from Edwin Lefebvre called Reminiscences of a Stock Operator. It's a book I highly recommend to read, and you again will have a link in the chat box, guys, so you can buy the book or read it, or you might have it already. It's about the life of Jesse Livermore, an extremely successful stock trader at the end of 19th century and beginning of the 20th century. You can learn a lot about the history of stock market and trading, how it was before 150 years ago. There are so many interesting stories, but one chapter particularly struck with me as a psychologist because it talks about fear and hope, which touches, I want to talk about this topic here, and it closely links to the fear of giving back profits. So why is this part in the book so important? Well, when someone is worried about giving back trading profits, it means they will most likely be selling too early with small gains and selling too late with big losses. The point of profitable trading is to sell with big gains and small losses, not the other way around. Let me explain what Jesse Livermore already back then discovered. Imagine 150 years ago, 100 years ago, yeah. So human psychology in the market works in opposition to how it's beneficial for our profits, right? As people say, the market is designed to take our money. Yes, it's partially true. When people are trading and the trade goes against them, they start hoping for it to reverse and being profitable, right? Like you're losing on a trade, the red is getting redder, you're losing more and more money, and you're starting to hope that it's going to go in your direction at some point. And the losses are just becoming bigger and bigger. So instead of getting fearful and getting out of the trade super fast, fearing the worst possible outcome that you lose all your money, we tend to really hope for the fortune to reverse. And in many cases, one might even start averaging into losing position that they wait too long until the loss is so huge and you cannot recover from this loss at some point. And in the flip scenario, when people are in a winning trade and have little gains, the fear kicks in instead of the hope. So the fear kicks in and people look at their little P&L and have little unrealized gain and say, you know what? Oh my God, I made a little bit of money here. Let me just grab it so I don't lose it again. The fear takes over and you sell. And then you see the stock just taking off, right? And you're like, oh my God, I cut myself so short. So as Jesse Livermore said, instead of being hopeful when the stock is going in your direction, stacking in a trade for longer and adding to the winning trade, it feels natural for us to do exactly the opposite. So where does this fear come from? As I've already mentioned, many traders hope to make money in the stock market fast and easy, but the stock market is unpredictable and most people lose when they start. So trading is simple but not easy. And the fear of giving back profits most likely stems from the fear of loss, which I was talking about just before this fear. When you have negative experience of losing money, it's hard to get it out of your head because you feel betrayed and you feel traumatized oftentimes. So now, driven by your fear of loss, you overreact to protect every little profit you have and you're scared to give back your gains. So let's put some math to this. So it turns into a vicious cycle because, for example, let's say you have 50% chance of making $10 on every 5 you risk. You can engage in 7 trades that result in 4 losses and 3 wins in that order. So if you let those 7 trades play out, you will net gain of $10 and you lost 20. So that means you net gain 30, 3 times 10, and you lost and you lost on the 4. So you net gain 10 because you lost 20. So because of a fear of giving back profits, what happens, however, you close your trades with the first gain of 5, not 10, because you're taking them too early. So now you have lost 20, but you gained only 15. So you have created $5 net loss. You see my point? It's not important how many times you're right or wrong, but how much money you make when you're right and how little you lose when you're wrong. And that's super important concept in trading, guys. Something you really need to pay attention to, because you can be successful and make money with only 40% of your trades going in your favor, as long as you manage them properly. You also can you can lose money when you are 80% of time right, and you have success rate win lose ratio 80%, but you can still lose money if you manage your trades poorly. It's all about the risk management. So let's look at this chart now. I'm going to show you, which is very important, okay? So you can see that bigger your wins, which is reward, the green one, versus your losses, which is risk, the red one, are, lower your winning ratio needs to be for you to be profitable. So for the newer traders, let me explain risk-reward ratio quickly. Risk is the maximum amount you could lose on a trade, or you want to lose on a trade. It's directly connected to where you set your stop loss. So for a $50,000 account, you can risk between 1 and 2% is suggested. Of course, it's up to you. You can do much less. I wouldn't suggest to do much more. So you want to risk between 1 and 2% on a trade. And so you would set your stop loss to not lose more than that. So let's make it easy. Let's say you're risking $1,000. Let's stick with 1,000. So when you take a trade and you say, I'm buying Tesla for $180, and you look at the chart, technical chart, that makes sense to set the stop loss at 170. So you're risking $10 per share, okay? So given that your risk is $1,000, how many shares can you buy? 1,000 divided by 10 is 100. So you can buy at most 100 shares with a $170 stop. So that's your trade. And if Tesla goes to 190, you made 1 hour on this trade because you have risked $10 and made $10. But as you can see on this chart, you will have to be right 50% of time just to break even. Therefore, when you risk $1,000, you want to make at least 2,000 or 1,500, because then you need to be right. If you make 2,000 on risking 1,000, you need to be right only about 33%, and you will be profitable. Just from pure facts, high winning ratio is hard to achieve even for the most successful traders, guys. It's anywhere between 40 and 60% statistically. So you don't want to spend too much time trying to be right. But you want to be quick with cutting your losses when you realize you're wrong, and enjoy the fruits of the winning trade as long as you can. But what if the fear is too strong? How can you get rid of this fear? I will sound like a broken record, guys. But again, you need to have a plan. And what it means, you need to research the stocks you want to trade and know when to get in and when to get out of the trade. If you don't know when to get out, you don't want to get in. It's simple. You know, you want to look at the technicals. I trade technicals mainly. Okay, it works. It does work really well. You want to look at the chart and say approximately, this is where I want to get in. And when it breaks through this support or resistance, that's when I'm getting out, depending what direction you trade. Okay. So you need to follow this plan and stop micromanaging the trade based on emotions, and look at it all the time. You can feel when you're acting based on emotions, right? When you have all these little voices in your head telling you what to do. If you stare at the chart all the time, guys, the stock price will not change because you're staring at it. So you can automate the trade orders with your broker, as I already said, set limits, sell orders and stop losses, and don't look at it. And, you know, if you have a hard time to control your emotions, you can, if it's a swing trade, you can come back to it at some point. You know, you can come back to it at some point and revisit the trade, especially in a choppy market. But I would suggest to not micromanage your strategy, because then you can't really know if the strategy works. You can also set trailing stops, which means your stop will be moving as the price goes up, or when you're short stock when the price goes down. And if you're lucky, you're going to make more money because your stop loss will be moving higher or lower. But remember, the market fluctuates, so it all doesn't work 100% every time, but there is the possibility to do it. All right, guys. So these were all the fears that I wanted to discuss today. And now I'm going to just do a last summary of what we spoke about and give you 11 tips as a wrap up. If you want to write them down or take a screenshot, I will have them on the presentation. That are actionable tips that could help you to manage your emotions and fear, especially around trading better. Okay. So let's go. Number one, reset your mindset, guys. Stop overthinking. Stop overthinking. Things are usually simpler than you think. Okay. Have a plan. Everyone says this, but really make a plan. Make a plan what you want to trade, when you want to trade it. Educate yourself about different trading strategies. There are many, and you have to look at what you like and how you want your life to be, how you want your lifestyle to be. Do you want to day trade? Do you want to swing trade? Do you want to position trade? Do you want to invest? Do you want to trade options? There's so many ways you can trade. You need to stay realistic, guys, because you want to evaluate the potential risk of every of these strategies. And, every strategy has a risk into it. So you want to know, you also want to know how much you can make. And I always say this, people expect to make so much money, but if you risk 1 or 2% of your account, then you are making about 1.5 to 2 hour trades. And you can do the math, right? Be prepared to trade, guys, at least 1 hour before the market opens. I do not believe that you can just hop in at 9:15 and start. 1 hour before the market opens, have two, three stocks max, so you don't overwhelm yourself. Something that looks interesting to you based on news and gaps, etc. Look at the chart, have a plan again. 6, trade things that don't make you too nervous. So for example, I was trading crypto for 6 years, and last year I totally stopped because it just makes me nervous. I feel like it's totally, for me, I can't predict this. I don't know what is it going to do tomorrow. I just cannot do any fundamentals. I can't do anything around crypto, so I stopped trading crypto. I cannot day trade options. I'm selling options. I found this works for me after 3 years. You need to find it for yourself. If highly volatile stocks make you nervous, you might want to trade SPY or Apple. 7, write down how to trade, how the trade makes you feel, guys. Always write down how you feel, because when you are trying to learn how to manage emotions, you're going to really know yourself better. You want to know what is really happening to you. Focus on quality execution, guys. That's only thing that you need to really be focusing on. You want to be taking A+ trades. Okay. You don't want to, you don't want to be just yawing into trades. Stick to them, stick to the quality execution, and have a proper work-life balance. No trading on alcohol, guys, no crazy coffee, like all these things. When you're sad and tired and you just have a hard time in the family, you might want to skip the day, because on top of you feeling miserable, you're going to lose money. It's not worth it. And keep educating yourself. Read books, educate yourself from credible sources, guys. Come to my webinars. I'm doing more of those on different topics. So yeah, I think that I covered everything I wanted today about the fear, FOMO and fear of unknown, fear of giving back gains, and of course, fear of losing. And while we can't avoid emotions, we can learn how to manage them better. Okay, so we can understand their root and help to basically work with them. So guys, master your mind. You can learn how to master your mind, and you want to be successful, and that's very important. And I also really hope that you can become successful and are successful, because I believe that really humanity needs to be happy and deserves quality life.